Good morning, good afternoon, good evening, one and all. Welcome to another exciting edition of The Smoking Barrel. I'm your white shirt clad person in Geneva with my illustrious co-host, also in the white shirt in Dubai.
I know. I need to. I think not this shirt. I do wash, and I do have a wardrobe. I promise.
I only have
Next
one.
week, I'll wear a flowery number, just so you can see. Greetings, though. How I hope everyone's well. I'll also have a new system. I won't have my old Cloud 9 microphone system that several of you subscribers, love you all, have commented on that. I should just stop being a tight ass and maybe invest a little bit, seeing as the Smoking Barrel is a podcast. Anyway, all good. I'm a little nervous. Arsenal playing tonight, 2 games left. We're 2 points ahead. We've got Burnley tonight. I'm not nervous that we might lose. I'm nervous that I said to myself that I'll stay up for the game. I'm not very good at that because in my older years, I seem to fall asleep a lot earlier on the sofa than I used to. But come on, you Gunners. Let's have it.
Well, if we can have it right now, what we got? We got crude markets sitting at $110 a barrel, almost spank bang right on the nose. We've got markets having an upward trend as it almost sounds like a show of will they or won't they? Will Iran and the U.S. go back to a kinetic war or will they not? Um,
I mean, it seems to be a regular Monday morning kind of Donald Trump says, well, you better sign this week or there's going to be trouble. And then nothing really happens. I mean, I've seen a couple of headlines out now. Where are we? Financial juice. Iran Foreign Ministry. Iran is focused on ending the war at this stage. The new Iranian proposal includes a commitment of unclear value not to produce nuclear weapons. Um, it's again, we're in this. Pakistan are kind of trying to broke it. Nothing came out of the Trump Xi Jinping meeting last week, apart from a load of deals and a good day for Boeing. That's all I got out of it.
yeah,
Um, we'll
and
talk
and
about
nothing
that more.
really and nothing really it came out of the BRICS summit either. If you recall, there was the BRICS summit in India last week, and I believe it was mainly the UAE telling Iran to stop attacking them,
Yeah.
uh, and Iran took a bit gumption about that.
Well, there was it was weird because I was cooking dinner yesterday with the kids, Sunday, usual, and my phone flashed up that there'd been a drone attack on the Barakar nuclear plant, which is in Al Dhafra region. It's about 150 miles away. And the Barakar nuclear plant is, I think, the first one in the Middle East, if I'm not
Yes,
mistaken.
yeah,
Yeah,
I think it's the first and only one in the Middle East.
yeah, I think so. I mean, there was no issue around uranium enrichment here, but it makes up around 25% of the energy mix. So, power production, nuclear is now about 25%. That's the contribution. Now, the issue, I mean, obviously, everyone just like nuclear plant shit, what's going on? The 3 drones fired yesterday, 2 were intercepted, one hit a electrical power generation plant within the Barakat nuclear site. And everyone was like, hang on a minute. You know, the problem was that Iran didn't come out with anything. Right, okay, we fired because of this, blah, blah, blah. The drones actually came out of the west of the country. And then Saudi were attacked by 3 drones that originated from Iraq. So I think you're looking at some militia activity that's going on. I don't know, but that seems to be.
Well, that's
I
the whole plausible deniability. Oh, we didn't do it. Our proxies did, but we didn't.
yeah, right. And I fear that that this will be buried because it was quite a significant escalation. And I think flat price rallied at the open because of this. I think we've come down because, we were up a lot higher. The day was 112. So we were up just under $3 a barrel this morning, um, early doors. And now we've come down, we're at 110.20, so up 94 cents, still up. But yeah, it seems to me that Iran Foreign Ministry spokesperson, another headline, Tehran demands in negotiations with the US, including releasing Iranian frozen funds and lifting sanctions. And I think you're going to see this. We want our money. We want reparation because the country's obviously been significantly, um, you know, large parts of it significantly destroyed. Um, and obviously, Strait of Hormuz. This is the issue. Everyone, and I put this in my commentary this morning, and I'm going to talk about it in a minute, is that a reduction in noise doesn't mean a reduction in the sort of danger still around the whole issue. You know, the Strait of Hormuz is still closed. There's some oil, but it's trickling through. I want to show you this number. Look at this. I think I shared it the other week. Um, the Hormuz shock. Let me go to here. So we're at 870 million barrels now of cumulative oil losses. Will be a billion this time next week. That's a lot of oil, and you know, no one can move away from that. But we're in a position now where the market just seems to be, and this is what I wanted to talk to you about. It's nearly 3 months since the conflict began. In the normal scheme of things, you know, when we're looking at when a market kind of reacts to the new norms, are we not there? Is the market not normalized?
Well, I would tend to say that I believe the market has fairly normalized. I mean, and what is your case of normality? I mean, it is, you know, if you recall back when the war started in the first month of the war, there were talks that, oh, Europe's going to run out of jet fuel within 3 weeks, two
Yeah,
weeks, six
yeah,
weeks. Here we are, 3 months in. Surprised to say we're almost 3 months in, and Europe has yet to run out of jet fuel, and actually jet fuel stocks are fairly in fairly good stead.
yeah,
And there have been a lot of tools that have been utilized by governments to help alleviate the supply crunch. I mean, one of the
yeah,
things that I've been noticing in a lot of different jurisdictions is the relaxation of different grade restrictions on fuels. Because, you know, in our current world environment, if you look at pre-war, you know, we had very tight restrictions on sulfur, on RVPs. When you look at gasolines and diesels, you know, jet fuel, you had different markets for different grades of jet. The US was Jet A, Europe is Jet A1, Jet Dirt, and other markets. And so, you know, we've seen countries relax some of the regulations around fuels in order to maintain a better supply cushion than what would have been there if we kept the current rules in place. I mean,
yeah,
Australia, New Zealand, they relaxed sulfur regulations. The United States has waived RVP, which is, you know, the big thing
really.
where during the winter you have a higher RVP of gasoline you do during the summer, which means you have to change your gasoline blends going into the summer to reduce the emissions and to reduce the RVP. And they've eliminated, or at least they paused those regulations for this summer. You've got the relaxation of Jet A into the European jet fuel mix. So instead of, you know, you can have Jet A or Jet A1 at a European airport.
Yeah,
So when you start thinking of all these little levers that are being pushed, it's probably flattened the dramatic supply curves that everybody was showing in the beginning of the world, and it's probably made them less dramatic. They're
yeah.
still there because we are still drawing globally, we're still drawing stocks, but we're not drawing at a high rate. We're probably drawing at a less steep rate than we would have done if things had not been adjusted.
Yeah, look. So if you look at here, so this is, I don't know if you can see that. Can you see this?
Yep.
So I'm zooming in. So this is World Weekly Inventory. So we've got global onshore crude oil stocks recently dipped to as low as 3.6 billion barrels, representing a 130 million barrel decrease from the post-pandemic peak recorded late March. That's here. So here's COVID, obviously. Look how much, I mean, stocks, what is that, middle of 2021, when the world was starting to come back after COVID. Stocks now are double what they were then. And people, I don't remember people panicking as much in middle of 2021 about stock levels, do you?
Oh well, in 2021 there was actually some panic because of the lack of some fuels, but nevertheless, you know, demand was not that high either. Remember, we didn't have. I mean, travel was still regulated. You know,
Yeah.
people had some controls. People were still working from home, so you didn't really have that big demand profile.
Yeah, I mean, look, if you break it down by country, but you can see, I mean, that's pretty, you know, this is the glut that everyone was talking about here. And I want to talk about that in a minute because I think we've flipped on the head now. But China, 1.2 billion barrels in storage, up 25 million barrels since the conflict began. Japan, Japan has drawn 70 million barrels of stocks, which we knew. because of the SPR, and obviously low imports because that oil just simply can't come out. The US reached a post-pandemic inventory high of 378 million barrels in early April. Now we're down to 350. And then look, you can see it here. Daily global crude oil on the water, you know, is compared to January 2025. I know that it's tied to sanctions, is still a lot higher. Weekly sanctioned crude oil on the water. There's obviously a lot of Vens and Iranian, and then these two bottom ones are Russian crudes, still high.
Why are you guys showing Venezuela as sanctioned?
That's a good question.
Sanctions
Is
haven't
it?
pulled on Venezuela.
Have they?
Yeah.
Okay.
Now, unless this is barrels that were sitting in inventory in, sorry to digress, viewers, but unless that was inventory that's been sitting in like t floating storage in markets and can't get its way out.
Yeah, yeah. I will dig into that and revert to you, caller. Okay. So that's sanction barrels. Forget the blue one. Global crude and condensate balances. Look at this. So this is 2026. Look at where 2024 was down here. That's a significant deficit on a supply and demand balance. 2026 is a lot higher. The data here is quite robust when it comes to how much oil there is around. And just going back to what I said earlier on is that APEC, you and I were sitting there, Harry's boat key, wherever we were, and the glut to end all glut is about to come on, and we were like, well, yeah, but there's a lot of oil that people can't buy. And everyone thought prices are going to go down to $40 a barrel, and everyone was like, that's way too bearish. But no one really, a lot of people argued with our opinion there. And you can't really argue with S&D balances because
Well,
once it
it's math.
starts,
It's math.
yeah, exactly. But they can argue with, okay, well, actually, is it oil that people can buy, and is it going to play down and what's happening with gas or refining margins, et cetera, that kept the whole energy complex bid. But now we're on the other side where the world genuinely does have an energy security issue, but we're not at 200. We're at 110, which seems like it should be catastrophic for the market, but it isn't. It's largely been stuck in a range band. So I'll be the other way now, as the market sort of said, I was panicking when the conflict first started about an energy crisis, but now I can kind of deal with it. And $3 a barrel move, like we saw this morning, is because the narrative's a little bit more aggressive than it was on Wednesday.
Yeah, I would fully agree with that. I mean, if you look at the actions that the Chinese have done, I mean, China basically cut back refinery runs and they reduced their exports and they basically have reduced their consumption of crude to the point where they're building stocks, which
Yeah.
is surprising. When you think of the narrative that's out there, everybody should be drawing stocks. In the United and I think you see a lot of changes happening with people's consumption patterns as well. There was an article today about people are opting to take trains in Europe more than driving a car or taking a plane to go on
Yeah.
their vacation holiday or do a
Yeah.
holiday trip. Because again, you're seeing this change in demand and consumption pattern because there is a concern that if I take a train or if I drive my car, will there be gasoline in the destination I'm going to fill my car up to come back home? It's a bit
Well,
irrational, but that's the mindset.
yeah, because I mean, it's ridiculous because Europe doesn't have a structural issue with gasoline supply as one with middle distillates.
Yeah. But these are the things that people I've talked to just on the cuff about what they're doing for holiday plans and how they're changing their holiday plans. Some people haven't changed in them at all because I bought my airline tickets. They were cheap. So you're not seeing a big spike in airfares that you'd expect to happen if there was a tightness in the market.
Yeah.
And so there's a lot of behavioral changes that have happened because of concerns people have, but it hasn't been reflected really in the outright overall pricing just yet. And when you look at it from a crude market standpoint, there is a lot of crude around. The SPR releases have happened, and that's put a lot of surge supply into the front of the market, which the market is having trouble to absorb right now.
Yeah.
And so
And
you talk to physical crude traders, there is a dearth of crude in the market, so much crude in the market that premiums are collapsing. Even though OSPs are going up, premiums are collapsing.
yeah, I saw that on Friday actually. And that's a really good point because there's plenty of oil around. In fact, Angola are offering almost discounted barrels because people aren't buying them.
Yeah,
So
because they don't have a need.
and where was it? Where's Wags? Hang on. Um, yeah, I mean, when you've got the SPR, you're right. Energy Secretary Wright came out on Friday and said the US will replenish every barrel of oil it releases from the SPR. So in the immediate, it kind of frees up the system a little bit, but further down the line, that's good for demand. But I'm looking on when was Friday? That was the 15th, wasn't it? It was the 15th, yeah, 16, 17, 18. US rig count up 15. Where sorry, up 5 to 415. Um, but you're right because I think there was a few cargoes that were being offered in the window. Where is it? Sorry, um, I can't find it. I can't find it. But it basically was that yeah, there's too much oil in the system, and it's weighing on. I mean, if you look at the DFL, the data to front line, that's back where it was pre-conflict.
Yeah, it has come off.
Yeah, I mean, it went up exponentially, of course, because people panicked and were scrambling around. And I'm sure, I think Q2 will be a little less. Q2's certainly been a lot less volatile than Q1 was, or the last month of Q1, if you like. Um, Actually, no. So I
Yeah,
would say, where are we now? Middle of May. So March and April were chaos for the market. May's been quite steady.
well, I think it was, towards the second half of April, people kind of caught their breath. In that first instance of the war, yeah, there was panic buying because you had an immediate shortfall because of all the barrels that could not get out of the Straits of Hormuz that had already been sold to refiners, and
Yeah,
those refiners had to cover with something in the prompt. And so with the SPR releases, that helped cushion that blow. There's still been refining issues and supply issues in certain countries in the Far East. I
yeah,
think those are going to be persistent for the time being because it's going to be a hard time for a lot of those refiners to buy crude at the current levels to fulfill their system because they've got price controls on the gasoline and on the diesel. So unless they get a pure government mandate, they're going to be holding off on their purchasing for the time being. But nevertheless, so that supply crunch has now been met, and now we've got more oil than we know what to do with at this moment in time. But that doesn't mean that we're being Pollyannas either. I mean, there is still a stock draw going on.
oh yeah, yeah, absolutely.
It's the rate of change in stock, which has probably decreased to the point where it has become a bit more normal when you think of it from the inverted commas of oil trading, where throughout the history of oil trading, you have years where you have stock draw and you have years of stock build.
Hmm.
And these draws could be 1.1 million, 1 million barrels. And that's like, oh, okay, we can manage that versus a stock build of, people were predicting 3 to 4 million barrel per day stock builds for this year. And we're probably now working in a 2 to 2.5 million barrel per day stock draw. And in the grand scheme of things, we probably have enough oil to cushion that blow for a few more months.
Yeah. I mean, look, just sum it up. West African crude diffs have dropped sharply from record highs in the last couple of weeks, weighed down by narrow refining margins, refinery run cuts, and China, normally a major buyer, selling cargoes, traders say. So
Yes.
look, it's the thing is that you're right in that let me put what I put in my commentary today. Flat price will remain elevated, 100. It would do, I think, anyway, and we said this a lot, because of the issues between Russia and Ukraine, which are pretty brutal right now.
Yeah.
But I would argue the oil crisis that people were pricing in and that took up many newspaper columns hasn't really arrived. And yes, the longer that the Strait of Hormuz is closed, there will be a problem. But certain countries are going to have a serious problem. They have already, but they're still getting oil.
Yeah. And it is a case, I think, at least right now, in my mind, and it's still going to be a case, is that there's more of a refined product issue, refining issue than there is crude supply issue.
Yeah,
And these are two pieces because when you think of how many refineries are blocked right now from exporting product in the Middle East,
yeah,
and how many refineries were rationalized over the last 3 to 4 years because they're like, oh, well, this is unprofitable, shut it down, or regulated out, shut it down. we do end up in a position where the refined products are still going to be the ones that I think are going to be far squeezed the most than you have on supply from crude.
Well, the problem, I'll tell you what happened was lots of the best traders are always the calmest in any situation. Remember my mate Jurgen used to be able to keep you're the same. You keep an extremely level head when everyone else is kind of going mad around like. But I genuinely think that what happened was with the Strait of Hormuz crisis is that the world firmly believed that the global energy system was breaking, right? There was a serious rupture in the global energy, and only the most experienced of traders put their hats on and went, but markets always adapt. They always adjust extremely quickly. But everyone was pricing in and talking about panic in the system. There's no oil, 20%'s gone down. UK and Europe are going to run out of jet fuel. Whereas those in the background are saying, relax, watch how the markets and buying habits will change extremely quickly.
Oil finds a way.
Yeah, exactly. I mean, it's like, when you want a curry, right? When you really, really fancy a curry and you go out with your mates and you're like, I can't wait for the curry tonight. And you get there and your curry house is closed. What you do is you don't go, fuck it, I'm going to go and have a Thai, right? I want an Indian curry. I'm going to go home and make one. That's what I'm going to do. I'll still get my curry, but I'll get it one way or another. And I think that's what the market's doing. It can't get its oil from the previous ways that it used to get it, but it will still get it. It's
Well,
just might take a bit longer and cost few more quid.
and it does take time for supply chains to react. So, I mean, we've had to redirect. I mean, very similar to what happened with the Russian war. When the Russian-Ukraine war broke out, a lot of panic around, oh my God, we're going to lose all this oil, sanctions, yada, yada. And it took about 2 to 3 months for the supply chains to reconfigure to meet the new trade pattern developed around the Russian war. And I think we're
Yeah,
seeing the same thing here. Is that okay with the SPR releases and with freight being redirected? And we still have a lot of ships trapped inside the Persian Gulf. However, markets have readjusted supply chains once again to take into consideration everything that's happening. And governments have done their part by relaxing regulations on different types of emissions and different types of specifications for fuel, or delaying any type of spec changes that they were planning to do this year. They've pushed them down the board. And so we've come into a more manageable situation, but it still takes about 6 to 8 weeks for everything to get kind of ironed out in the system to make
yeah,
those impacts happen. Now, one of the things we are seeing, and that's going to directly impact demand going forward, we are seeing inflation start to creep into the entire world economy.
yeah,
PPIs
absolutely.
are up. Outright inflation has ticked up across the board, and so and that's just a function of the higher cost of energy being translated throughout products. And so what will eventually happen is, we will have economic slowdown, which will crimp demand even more
Yeah.
and cap price movements going forward. I mean, and that could be something that we're going to probably see if everything stays as is today. In Q3, we'll probably start seeing a lot more demand destruction. We'll start seeing a lot
Yeah.
more, additional behavioral changes. I mean, there's already talk of, countries asking employers, "Hey, work from home if you can."
Well, we saw last week on that. France's diesel demand declined 9% year on year in April, soaring prices cut into demand. And it will change people's buying habits as well.
Oh, it
Try and
does.
get a diesel car in China. Not a chance. So I think that people's buying habits will change, will go electric. Look, just before we go, our first love, fuel oil, our only love, I think that's in for when I say a good summer, we've got utility demand season that's got to kick in. My colleague Roz wrote something about it. It's suddenly got hot. What is it now? It's okay. It's 34 today. Not too bad, but it was hot over the weekend. We've got Eid al-Adha, the holiday next week. Eid Mubarak in advance for anyone who celebrates. We've got Hajj season in Saudi, air conditioning season. A lot of that fuel oil cannot get out of the Middle East Gulf right now. Direct crude burn, probably Saudis in the Red Sea. But fuel oil's in for a good Q3 summer, would you say?
I think fuel oil should be in it because, again, you've had a lot of refineries in the Middle East that were fuel oil exporters that aren't being able to export right now.
Yeah,
And
yeah,
so you're
Q8
losing
Bahrain.
that supply, the high sulfur and the low sulfur that came out of those markets. Utility burn, I would expect that Saudi would probably burn more heavy crude than
Yeah.
buy fuel oil. just because you don't want to shut in all your production, so you keep that crude burn probably at a higher rate than you've done in the past. Um, the key point is shipping demand is still pretty good, except in certain ports like the port of Fujairah, you know, consequently because of everything that's happened, lack of ships transiting the straits, lack of bunker demand there, that's being picked up in other markets. And so, you are seeing a fairly good bunker market across the globe in different areas that weren't there before. I mean, Panama is having this fabulous year right now
Yeah,
with all the ship transits going through the Panama Canal that weren't there before.
to the
So
detriment of the Suez.
yeah, and well, I mean, the Suez is doing not doing too bad either. I mean, they're both doing fairly well. But when you have all these cargoes that are being loaded to go to Australia,
Yeah.
Panama Canal is the best way to go versus going around Africa. But I think what we'll probably see, especially from the VLSFO, is that because the VLSFO pool is made up of refinery feedstocks, as well as other residual fuels that are produced from refineries, those refinery feedstocks, your VGOs, your low sulfur straight runs, are probably going to go into high FCC yield production versus being available for the bunker blending pool, which is going to keep prices on the VLSFO side elevated. And high sulfur probably will be okay as well, just because you don't have all that high sulfur supply coming from the Middle East that normally is in the market.
Yeah, look, just
Yeah.
on that, obviously we saw the UAE leave OPEC, and then on Friday we saw the UAE or ADNOC are going to expand what they call the West East pipeline from the Murban field into Fujairah. I wonder if we will see a new refinery built because only crude can get out, not products. The Ruwais refinery is there, product still locked in. The crude pipeline bypasses the Strait of Hormuz. I wonder if you see some investment in the refining space in around Fujairah.
Well, why build a refinery? You can just build a pipeline.
Well, because but there's only a crude pipeline.
Yeah, I know, but why not? I mean, when
It's
you
a good question. I agree.
when you think of a capital allocation, if you're ADNOC, you say, well, okay, we can build a refinery, which is going to be $1 billion, or we can put pipeline that does gasoline and diesel like Colonial Pipeline across the isthmus, and now we can export just CPP.
I wonder. That's what I mean. I wonder if you see a continued expansion of this kind of
Well,
investment.
not that we're stock pickers, but that's the thing that I would be looking at would be those infrastructure types of companies that build pipelines, what have you. And this might be a change in the whole landscape of the Middle East because if you have the IRGC being a toll taker and a manager of flow through the Straits of Hormuz, do you just bypass the Strait of Hormuz altogether? Say, you know what, we can build a pipeline and get it out through Aqaba or get it out through the Syria or get it out through Yanbu. We don't need the straits anymore.
Yeah, well, that's probably the way we're going to go. Anyway, 109.92. Brent, so floating around the 110. I'm away next week. Well, I'm not away. I'm going to be here. We'll probably record. We'll do something. I was going to go away, but everyone else is going away, so I'm taking advantage of some quiet roads for Eid al-Adha celebration. So I'll see you then.
Very good. Well, hey everybody, click like, comment, and subscribe. Recommend to your friends, and we'll be looking out for you. If you're in the hazards way, keep safe and keep trading smart.
Ciao.